We are not anywhere near the bottom. Another 80% drop for sure, heading into another 1930s era depression where unemployment rate is 60%. Worldwide depression will last 50 years. 1930s lasted 12 years. Bread lines at the street corners will again be commonplace. People lining up and waiting 3 to 4 hours for their half a loaf of bread, a half a bowl of porridge on the weekends, water filled in jerry cans. This will be the conditions in the U.S. again. Fed and its EU central banks will continue the tightening no matter what it does to the economy. They have lost their minds. F their reputation. So, I want to talk about this because, there's definitely a lot of people that think not only are we headed into recession, but they're convinced we're headed into a depression, okay? And I want to talk about this for a moment. I want to show you guys a few things. I think it's an important subject. I think it's on people's minds. And when you're in a time period where, people are scared, when people are scared, they take their thought process to the most extreme version, right? And it's very commonplace. Like if you understand the way the brain works in psychology, when people are scared in these sorts of things, they take their brains to the scariest place possible. And so they always think about like worst case scenario, right? And so, if you think about, first off, unemployment is 60%. I don't know where they got that, okay? Global unemployment reached about 25% peak, which is absolutely an insane number during the Great Depression, 1933. Absolutely incredible number. And let's not forget the Great Depression, there was a lot of things birthed out of the Great Depression. We learned a lot, right? You can't even really compare what the economy was like prior to the Great Depression versus what the economy is now. But obviously there was a lot that came out of the Great Depression that completely changed the way everything's done in the United States of America. The banking system, the Fed, everything. That was something that the United States went through and obviously the world went through that changed everything forever. And after that, obviously World War II came. Shortly after that, which changed the world forever because of the nuclear bomb. And that was a thing that, the only reason we have, just so everybody understands, and this is very clear, the only reason we have peace between superpowers nowadays is because of the nuclear bomb. If the nuclear bomb never happened, we would still be having world wars all the time. Why has there not been World War III? Nuclear bomb. That's it. Because every single major superpower understands crap. If we get into it with this other superpower, they got that capabilities. And so there was so much birthed out of that. There's so much that changed things forever from the Great Depression, essentially. Okay. Now, what's the difference between the Great Depression? I mean, there's a million things, but on the unemployment side, the truth is they would never, ever let unemployment climb to 20-something%. And if they somehow, unemployment ever did climb to 25%, which is completely unrealistic, they would just give people money. That's as simple as that. That's all they do nowadays because the Fed's there to do that. Look, we literally 2 years ago, we had the perfect example of this, right? Unemployment climbed to 15% or whatever, ridiculous number, the highest by far in modern history, right? And what happened? Stimulus checks and, unemployment checks and everything. That's just what the government does. If you get into any sort of situation where unemployment goes up in any meaningful way, the Fed's there to backstop it. They're going to do whatever it takes. They're going to print as much money as needed. They're going to, find any way to, slosh money out there. Now, where the Fed screwed up in this last situation is they printed way too much money, is I guess the best way to say it. They went too crazy with it. Between the stimulus, between what the government was doing, between the PPP loans and all that stuff, they went too far overboard. Between all the asset purchases the Fed was doing, they went way too far, and that's why we ended up into bubbles, right? We saw bubblicious things happening in the stock market. We saw bubbles happening in real estate, bubbles happening in crypto. And they went way too far with things, and so now we have a bunch of high inflation, right? They went too far with it, bottom line. Now, when we went off the gold standard back in the 70s officially, there was something that changed the United States forever, right? And basically what we adopted, and the government doesn't really like to call it this, or they like to try to almost avoid this, but basically what we have is, some people call it modern monetary theory, others call it monopoly money theory, okay? And it's essentially where the Fed, the government will spend money, they'll slosh money out there either through different, programs the government will do, or the Fed will buy up assets or whatever, stimulus, anything, right? And so they flood the economy with money, right? and all that money ends up getting spent around, used around. But the problem is sometimes they go too crazy with it, which obviously they did in 2021, right? They should have stopped all those a lot of those programs. They should have stopped in 2020, but they kept so much of them going, including a lot of the asset buying the Fed was doing into 2021. And what they caused is the economy to overflow, right? Which caused obviously ridiculously high inflation that we're going through now. And so they went too crazy with it, right? Now, when the government shuts all that money that's sloshing out there, right? When they shut off that faucet, the economy gets pretty serious, pretty darn fast. And the financial markets feel the first, right? And that's why we see NASDAQ down 30+% year to date. Look at Bitcoin's down like 60+% year to date. Ethereum's down, 70-80%. Countless stocks are down anywhere between 30% and 80% just in the past, 6 to 9 months. And so things get pretty serious pretty darn fast when you shut off the faucet. And that's essentially what happened here, right? And I want to show you guys such a great video, okay? This is such a great video that I want to show you. And I love to, shout out different YouTube channels. And this is probably the smallest YouTube channel I've ever shouted out on my channel before. They have 414 subscribers as of right now. But I think they put together a masterpiece here. I think this video should be shown in every school across the United States of America. I mean, I just think this is beautiful. Like watch this. Is the Federal Reserve a Ponzi scheme? Watch this, okay?
The Federal Reserve System was created in 1913 by President Woodrow Wilson, my least favorite president and the one who induces within me an urge to vomit. And he did this for a purported purpose, and that purpose was to reduce the severity of economic recessions by first managing the money supply and two, serving as the lender of last resort. Now, what in the heck and bob do those things mean? Let's get into it. So first, managing the money supply. Back in the day, we had money that was pegged to a set amount of gold, and thus was unmanageable. Oh, the nostalgia. But now we have fiat currency, which is only backed by our undying faith and loyalty to the United States Republic. Gee whiz. What this means is that the Fed can create money, in quotes, at will through increasing the supply of reserves. This pushes down the federal funds rate, which in turn lowers interest rates throughout the economy and makes it a whole lot easier to borrow money. So expansionary monetary policy is essentially flooding the economy with inflated dollars to disguise economic contractions. This lowers interest rates and stimulates the economy fraudulently. This makes economic recessions worse in the long run, but I'll explain that in another video. Next, the bank is supposed to be the lender of last resort. But you know what would really help this explanation? A series of cartoon drawings. So we've got a bank. Let's call it, the Bank of the Dying Empire. No reason for that. It functions like a normal bank. People put their money in it for safekeeping and for some incredible return of 0.6% annually. The bank, in turn, invests that money into something that generates a higher return than what they give the poor citizen, aka rent seeking, aka zero-like behavior. But the catch is, the poor citizens can go get their money whenever they want. This presents a problem for our bank friends. Cash, as we know, generates a negative return due to inflation, so the banks hold as little as they are legally allowed to. They do not have enough cash on hand to pay back everyone if they all came at once. So what if more people than they can fund want to get their money back? What if everyone wants their money back? Well then, in layman's terms, the bank is screwed.
Yeah, exactly. I mean, if all of us watching this video right now and everybody else in the United States wanted to go down their banks right now and try to get all your money out, that ain't happening. I'll just be honest. It's not even close to happening, okay? I don't even know if 5% of us would get our money right away.
This is where the Fed supposedly comes in. In times of crisis, the Fed serves as the lender of last resort. So a bank on the brink of collapse can come and get a loan of Fed reserves to pay off the angry mob of poor citizens at its door. This is what the Fed was originally created to accomplish. Already not my favorite in terms of logic or integrity. But now let's talk about how it officially becomes a Ponzi scheme. The country is in debt, like a lot of debt.
But at the end of the day, that was necessary, okay? And we can push back into that. It's necessary. Like, at the end of the day, when people freak out, right, they go to these extremes. What was a huge part of what led to the Great Depression was the fact that everybody panicked at the same time. Everybody wanted to get their money out of the bank, and all those banks failed, right? And it wiped out the entire financial system, essentially. And so, although, yeah, it may not be our favorite, it's really your only choice you have because humans are humans and they're going to act ridiculous and all of a sudden everybody gets panicked. Nowadays, when we go through these time periods of everybody's scared, the difference is not everybody goes running down their bank and like, I got to get all my money out because they know the Fed's there to give them their money if they need it, right? And so it's a very different situation.
And we simply cannot afford to pay for everything the government does each year with tax revenues alone. So we keep on issuing more debt. And eventually other countries stopped buying the debt. So you know who started buying it? The Federal Reserve, by creating more reserves. Let's say that one more time. Our government spends money it doesn't have on whatever the heck stuff, then gets a loan to pay off that spending from its own central bank, which got the money to loan from the printing press. That's pretty Ponzi, but we're not done yet. Since we've been in debt for, a century, we owe interest on the debt we have not paid off yet, mainly government bonds issued to nice old people. So we use today's dollars, which are half of what they used to be worth because of inflation, to pay off yesterday's debts. And we do it year in and year out. That's by definition what a Ponzi scheme is, luring in new people to donate money to a dying cause to pay off last year's debts. Okay, you can't just print money though. The value has to come from somewhere. And where does it come from? Your wallet, because now every dollar you own is worth less than when you earned it. By definition, they are stealing your honest labor from you. So what did we learn? By the Fed printing more money, the government pays for its insane spending and reduces its existing debt burden at your expense. Just wondering, did you vote for that? Me neither, pal, me neither.
Yeah, beautiful video. I think it's top 10 video on YouTube right there. But at the end of the day, that's just, in terms of like these worries about a Great Depression or something like that, as soon as, and believe me, if unemployment starts to go up in any meaningful way, Fed's going to be there to try everything again because the political pressure gets heavy, right? If all of a sudden unemployment ticks up majorly, the Fed right now is raising rates and they have no fear of raising rates right now because unemployment's so low. As soon as people start losing jobs in mass, and all of a sudden you see unemployment tick to 4% and 5% and 6% and 7%, that's when the Fed starts freaking out. That's when politicians start freaking out. And so, yeah, if you're worried about Great Depression, always keep that in mind, guys. So anyways, much love as always. Hope you enjoyed this video. A little something different, and peace.